Good morning and welcome to our very first consumer webinar in our Newcomer Financial Series and Summit. On behalf of 369 Global and 369 Connect, as well as our partnering organizations, the Canadian ETF Association, and strategically, it gives me great pleasure to welcome each and every single one of you who are attending today's webinar. My name is Kumran Nadesan. I oversee group strategy here at 369 Global, and we are a group of companies involved in different sectors, including education and training, financial services, the creative industries, and social impact. The Newcomer Financial Series and Summit is a great opportunity that we had to partner with the Canadian ETF Association in creating a one-of-a-kind financial literacy series, especially targeting new Canadians. As you know, our group is very involved in different kinds of value creation for newcomers to Canada, whether that is through Computech College, which is a career college here in Ontario, or through the agency, which works with a lot of immigrant business leaders in building brands and businesses. Our group is very much focused on newcomers, and we thought, what better way to add even more value than through this lens of financial literacy. The entire series is actually quite long. It has about 8 parts to it. The next one's on in another 2 weeks. If you want to learn more about the series and the summit itself, feel free to visit us online at www.newcomerfinancialsummit.ca. The idea very much is to create a webinar series that any consumers, any new Canadians, or really any Canadians can access to learn about different things, including, as today, navigating the financial systems in Canada, but also more, equally tangible things that you as a consumer might be concerned about, such as, demystifying insurance, how to use different savings vehicles, how you can manage your wealth, how you can invest, how do you save for your mortgage, and so on and so forth. So we are really excited about the series on behalf of the 369 Global leadership team. I'm really glad to see a lot of you actually online today for this webinar, which is nice to know. And that takes me to our very first webinar panelist, who's also our partner at the Canadian ETF Association, Pat Dunwoody. Pat Dunwoody is currently the Executive Director of the Canadian ETF Association, which was the first ETF association in the world and only one of 2 currently. She has spent over 35 years in the financial services industry as a client and relationship-focused executive with an in-depth background in all aspects of the industry. Pat has been and continues to be an active member on many industry committees, including those at CCMA, IFIC, and FUNSIP. She is also actively involved in the community as the board chair at Community Living Dufferin and as a board member at Prosper Canada. Pat, on behalf of all of us, welcome to the webinar, and I'll pass it over to you.
Great. Thank you very much, Kumaran. And thank you everybody who is joining us today for the first of what is going to be a great series of presentations. We're aiming to provide you with the tools that you need to be able to navigate the financial services in Canada. And this includes where to find the information, how to select an advisor, how to arrange a mortgage if you need one, and many more topics to ensure that your success in Canada is throughout your lifetime. As Kumaran said, my name is Pat Dunwoody, and I'm the Executive Director of the Canadian ETF Association, as well as somebody who supports organizations like this, 369 Global. I want to support individuals like you as well. I'm thrilled to be a part of this financial literacy program because it's been a love of mine for many years, and I don't often get a chance to work on it during office hours. What we're trying to provide you today is information and guidance that you will need to succeed in Canada. We're not going to train you, but we're going to provide links and tools for you that you'll need to invest, buy a house, save for retirement, and every other major life event. We're not going to recreate the wheel, but we will look to best practices throughout the industry that have come to the forefront from other organizations. As Kumaran outlined, we've sketched out a series of presentations, but we would also like to hear from you on topics that you believe are important for you, and we can address those as well going forward. And before I start, I just want to say that you're going to hear a lot of terms and acronyms today, and I don't expect you to remember them or even understand some of them initially. I've been living with this information for over 30 years, so I can appreciate that there's a lot to take in. But with that said, don't feel that you have to take notes. The slides will be made available to you, and I'm also creating a document that will have all of the important information on it, and we'll append it and add to it after each session. So you'll have one great document with all the sources and information you need. So please just listen, ask questions, and if nothing else, remember that Canadian regulators are trying to protect individuals as best they can, but there's always people out there trying to defraud. So I'm hopeful that the information that we provide will ensure that this doesn't happen for you, to you and your family. So this is a high-level agenda for today. I'm going to start just by walking you through the differences between financial literacy and financial empowerment. I'll share places that you can contact if you have questions or concerns. If you're ready to select a financial advisor, some ideas about how to do that, including questions to ask them. Help you understand why we're doing this and what's going to come up over the next few months. I hope that you have questions and I can answer them during the presentation. Kumaran will notify me if there's one that comes through. And at the very least, we'll take them down and we'll answer them individually after the presentation. So please enter them in the Q&A box at the bottom of your screen throughout the presentation. So I wanted to start, as I said, that high level setting on the terminology. These two terms are used interchangeably, but they really shouldn't be. The high level definitions are on the slide. The financial empowerment is an approach to poverty reduction that focuses on improving the financial security of low-income people. And financial literacy is the ability to understand and use the various financial skills that you have for personal financial management, budgeting, and investing. The issue is that while financial literacy allows you to understand the terms and processes, it may not necessarily help you and research has shown that. For that to happen, you have to be able to act on the knowledge you have. And that has nothing to do with how much money you have. There are plenty of people that are considered well off that are not financially literate and have made mistakes in their finances. About 12 years ago, the Ontario provincial government made the decision to add financial literacy to the education curriculum. The decision was made to add a little bit each year in the first 8 years of schooling. So we really haven't seen the impact of that yet, positive or negative, but they'll be doing testing over the next few years. In another study, they did an analysis of 126 research studies, and it was found that financial education improved financial behavior and to an even larger extent, literacy. But it was highly varied. So financial education is less effective for low and middle income people. Specific behaviors such as handling of debt is really difficult to influence. And mandatory financial education may not be as effective as we first thought. And as I discussed, we'll get the research results over the next few years. Intervention for financial success depends on increasing the amount of education offered at a teachable moment. This means it's more important to have the information at hand when you're making a specific decision. For example, when you have a child, that's when you should look up and decide how you can save for their education. When you decide to buy a house, that's the time you look up to find out what's important about getting a mortgage and how to get a mortgage. Financial empowerment is really about assisting people that don't have a lot of money live as best as they can. It focuses on helping people and make them feel inclusive in the financial system. It increases opportunities and knowledge, and fosters behavior that are critical to helping people become more resilient through economic security and strengthening their ability to invest in their own futures. Much of the empowerment phase comes from changes in policy at all levels of government. So this is when a lot of the charities and not-for-profits can step up and assist and speak to the governments and intervene on your behalf. What research has also shown is that, again, it's less about the knowledge and more about the behavior. So you can know everything you can need to know about financial services and products, but your behavior may not match what you've read as best practices. So again, that's just, you need to have the information, but you really need the behavior to act on it. So just flipping back quickly to financial literacy, there are 3 fundamentals that need to be considered. The first is setting up a budget, or at least tracking your spending. The whole concept of money management is simple on paper. Spend less than you earn. That's it. It sounds simple, but there are choices that have to be made. And it's difficult, but if you're tracking your spending, at least you can make the best decision you can. All of the banks have tools you can use, or you can simply create a spreadsheet. You just have to have a process and monitor how you're spending your money. The next step is to ensure that you save for emergencies. Most people who get into serious financial trouble is because life happens. Something happens to your car, you have to spend $700 on it. You need the car for your job, so you need to find the money quickly. Many people use their credit cards, which may be quick so that you can continue work, but then it's going to be a lot more expensive than $700 because of the interest charged. However, some people take a more negative step, and that's reaching out to the money lending stores. And I hope and I pray that you do not use those. Find another source of funding. The interest rates are high. They compound much more often than monthly. And many people, once they take out a loan, they can never repay it because the amount keeps growing. So even if you just can put away a few dollars a month, please try to do so. And that can help you manage future unexpected expenses. And finally, just keep an eye on interest rates, specifically if you have a variable rate loan, which means it goes up and down depending on the market, or a mortgage. Especially in times like we're in right now, a raise in rates could significantly impact your budget. So you really need to be aware of the changes that are coming, because they could have a huge impact on your monthly costs. But before I move on, I just wanted to again remind you that I did promise that I would overwhelm you with terms, and I'm about to start. So I apologize for the next 2 slides, but I'll summarize it at the end. And I think if you take a look back later on, it will be a really helpful list of points that I'm about to share. Page 1. So as mentioned, all of these organizations and links will be on a cheat sheet, so to say, that I'll send out to you with specific information of what you can find on each page. I'll also leave a blank space at the bottom, so as you find your own sources of information, you can add to it. I know there's a lot more sources of information and websites, but we're already overlapping on the information that these organizations provide, and it's already overwhelming, so we're just going to limit to these that I'm really comfortable with and I know they're valuable. So the first is the Canadian Securities Administrators. This is also, well, it's known more commonly as the CSA. This is a collection of all of the provincial securities commissions across the country. So for you in Ontario, you would normally just go to the OSC, or the Ontario Securities Commission. For the OSC, it's a Crown agency, which means it's a government agency, but it operates at arm's length to the government. It regulates the entire capital market by making rules, setting policies that influence the behavior of the companies within the industry, not the investors, but the companies. This includes anybody who creates an investment product and anybody who sells it to investors. So if you have a question about a firm, this is where you want to start. The National Registration Search, that's noted on the screen, is an option that allows you to enter in an advisor's name or a company name to ensure that they are registered with a regulator. You can also see if they've had any disciplinary actions taken against them in the past. The OSC Investor Office provides you with a large amount of information and tools, including a great budgeting tool. They also have a segment that speaks to what is needed for major life events, buying a home, getting an education, having a baby, etc. These are incredibly helpful. Prosper Canada And as you heard from Kumaran, to be fully transparent, I'm on their board of directors, but it's a charity that supports low-income individuals and newcomers to Canada. Their approach is based on an integrated set of interventions proven to improve financial inclusion, opportunities, and behavior for people living in poverty or just above poverty. To make these solutions widely available, they don't create standalone programs for themselves. They work with governments, businesses, and community organizations to build the programs so that the services can be delivered by those closest to the individuals that need them. They also need to be sustainable in that once it's trained, Prosper can walk away and the agencies can run with them. They have to help to achieve the community goals, and they have to tangibly increase the financial well-being of the people, the low-income people that are in that area. So as I said, they develop innovative programs and tools, and they help build the capacity of any of the partners that they deal with in the communities. Financial Consumer Agency of Canada, which is FCAC, is responsible for protecting the rights and interests of consumers. They report directly to the Federal Finance Ministry, and it supervises federally regulated entities such as banks and aims to strengthen the financial literacy of Canadians. Currently, they're working on creating a database that would almost be a one-stop shop for the industry, allowing firms and individuals to view what is available across the board. So once that's available, you'll also be told, and so you don't have to search out all of the other sites if you don't want to. They also have their own tools that are incredibly valuable. The government created rules that federally regulated financial companies must use an ombudsman service. Now, what that means is it's an organization that serves as an advocate for consumers of products, in our case, financial products, but you can also have an ombudsman for patients in a hospital or employees for large organizations. Most of the organizations in the financial industry belong to the Ombudsman for Banking Services and Investments. Again, another acronym, OBSI. And they resolve disputes between participating banking services and investment firms and their customers if it can't be resolved between the two entities. They're independent, impartial, and free for consumers. So you'll hear when you can go to them, but it is free. You have to first go through the complaint process at the firm you're dealing with. But if you're still not happy with the answer that you come to, you can go to the OBSI and get the resolution from them. They're an alternative to the legal system, because if you don't like the findings from your firm, it would be incredibly expensive to go and get a lawyer. So this way, at least it's one more step that can help resolve the issues you've got. The ADR Chambers Banking Ombuds Service is very similar to the OBSI, and some of the banks belong to that as opposed to the OBSI. And again, the same process, you go through your firm's complaint process, and if you're not happy, you can go to them. While they may not be able to at this time force the firms to compensate you with the amount that you believe you deserve, they do a process that is called name and shame. So they will publicly go out and put the story in the newspapers, not yours, but the company name, and walk through at a very high level what the issue is and that they have refused to compensate you. So most firms try desperately to avoid that because that is terrible for their reputation. So you usually get your compensation. Second page, and I promise this is the last one of lists. Fair Canada is an organization that champions the rights of individual investors in Canada. They provide advocacy, education, and they work towards regulatory advancement, meaning they are working on your behalf. They collaborate and create a unifying voice for the rights and protections of all investors. And this is done by working with other groups in the industry and individuals like yourself to hopefully impact the areas that they believe need to be changed in the industry. They're always interested in opportunities to collaborate. And in short, they keep an eye on the industry. They raise concerns when they see processes and activities that they believe to be anti-investor. Canadian Foundation for Economic Education, or CFE, is a nonprofit that works to improve economic and financial capabilities. They work collaboratively with partners, departments of education, and school boards to develop and provide for free programs and resources for teachers and students. They also have a range of programs to assist newcomers to Canada as they look to settle and integrate into their new country. National Bank has partnered with them on their program, and they're now collaborating with a network of almost 800 immigrant servicing agencies to organize financial workshops to assist newcomers with any settlement challenges. The agencies integrate their workshops into their language training and helping to ensure strong attendance and interpretation support. They're also able to tailor the workshops to the needs and interests of the various groups by obtaining feedback and guidance from the agencies supporting that group. I've already reached out to CFE, and we will be speaking next week to see how they can support this initiative. So for the next three organizations that are listed, the Canadian ETF Association, the Investment Industry Association, and the Investment Funds Institute, they're all lobby groups, for lack of a better term, or support groups for individual segments of the industry. They all offer research, articles, information, statistics from within their part of the industry. They're more than willing to take questions from individual investors. If you have one, there's contact me information on all three sites. And I think it's really valuable if you are going to start investing, just to get familiar with some of the information that they have. The Canadian Bankers Association is the voice of more than 60 domestic and foreign banks operating in Canada. So they are the ones that deal with the government. They're a centralized contact for all the banks and public policies, because they are wanting to contribute to a really strong, thriving banking system, which has led us through a couple of really strong downturns because of the rules and policies they have in place. They want to ensure Canadians succeed in their financial goals. So to that point, they also promote financial literacy and to help Canadians make informed decisions. And they sponsor two specific financial literacy programs, one called Your Money Students and one called Your Money Seniors, both of which are really helpful for those two areas. The Canadian Life and Health Insurance Association works with about 90% of Canada's life and health insurers. Their mandate is to ensure that the views and interests of members and that of the public are equally addressed. So yes, they represent their members, but they're also always taking in consideration what the public wants. Again, they're a great source of information with guides to every form of insurance. So now I'm going to assume, for the purposes of this presentation, that everyone here is either dealing with or will soon be dealing with a bank in some form or another. So we'll start there. What do you do when you have an issue or a really major question with a bank? Well, step one is you need to raise it with, whether it's a teller or somebody within your bank branch. Most of the time, 90% of the time, they're going to be able to resolve the issue. If they're not able to, all banks must have a document that they call a complaint handling process that will outline not only the process that you have to follow, but also the contacts that you can reach out to ask your questions. So you can ask a representative at the bank or the bank manager, and they will supply you with that, and it will guide you through the process. If you're still not happy with the resolution that they give you, they have 56 days to comply with to respond to your complaint, starting from the moment you make the complaint. And if you're not happy, that's when you can take it to the OBSI or ADR, and they'll investigate complaints from your view, and we'll get back to you. Now, moving on to investing. If you've made the decision to invest, and I hope you make the decision to use a financial planner or advisor. Here are some steps that I think you should follow to ensure you're matched with the planner that works best for your circumstances. The best first step is to ask people you trust to see who they use as a planner and if they're happy with the services they're getting. And I'm not just saying ask friends and relatives. I'm qualifying it by saying asking somebody whom you trust their judgment. It could be family and friends, but not necessarily. You also have to consider the type of advisor that you need, starting with how they're regulated. So depending on what you want to invest in and how much money you have to invest, it will guide you through the system. So IROC advisors, they're with the major brokerage houses. They're firms that can sell all sorts of products, from stocks and bonds to mutual funds and ETFs, but also more complicated products. The MFDA, the Mutual Fund Dealers Association, they're able to sell mutual funds, ETFs, GICs, and other less risky products. And portfolio managers, they're regulated directly with the securities commissions. And as you can expect, they usually work with clients that have large investment amounts, and they can offer some really different bespoke investment plans, specially made for you. So not only is there a difference in registration, those three levels, there's also how the account would be managed. And again, in Canada, there's 3 different ways to manage an account. The first way is if you have made the decision to invest on your own. Again, I'm not recommending that, but if you've made that decision, you can find a fee-only advisor. Now, this advisor doesn't invest your money or manage your money, but they will work with you to create a financial plan and often a tax plan. It's usually a flat rate or an hourly rate. It may be expensive when you look at it, but it will give you the roadmap to what you need to do to save for whatever goals that you have. Fee-based advisors, they manage your investors and work with you on a financial plan, tax plan, and any other areas that you need. And the charge is a specific percentage on the amount you've got invested. This is a way of working with a partner in a true partnership, really, because they will earn more when your account does better. So I think it works hand in hand because they want you to succeed, because they will be more successful as well. And the final type is a commission-based advisor. And in Canada right now, it's the most common, but there are more and more changing over to the fee-based service model. And I know this is confusing, but it's important that you feel comfortable with an advisor and they understand your needs. So once you've sort of got a semblance of what you're looking for, I think what you then need to do is you have 3 or more people, and you want to really sit down and interview them. It's an incredibly important thing for you to make sure that your money works on your behalf. So you have to be confident in the person that you've hired to look after your money. I'm going to walk you through a few questions that I believe you should ask, and add as many as you want to after that, but I will give you some that you can start with. And then once you think you've made your decision, sleep on it and really make sure that you're comfortable with who you've decided. So here are some questions that I think are important to ask. Registration. Who are they registered with? And with the securities, making sure that they're with a securities regulator. I've shown you too where you could go to ensure after the fact that they are registered there, and then you can check to see if they've had any disciplinary actions. What's their education and professional experience? Again, you may not think this is important, but there are a lot of designations in our industry that are very specific niche ideas. Everything from helping with divorces in terms of managing the splits of assets, to newcomers, to if you have extra money that you want to donate to causes. So you want to really understand what their experience is and education that goes along with that. How long have they been an advisor? You may be comfortable with somebody that is new to the industry, but you may want somebody that has at least a period of time of experience, so they've lived through a bull market or a bear market, and can help you either recognize what you need to do or to help guide you through it. And as I said, do they specialize in any areas? Quite often they have a niche, so they may specialize in small business owners or seniors. That may be perfect for you if that's who you want to get to, because they will then come up with the best ideas to fit that need. How long has the firm been in business? This may not be as important, but I think it's still, it is a valuable question. And then how long have they been with the firm? Again, it's not necessarily something that it will make or break the deal, but I think it's something that you need to ask. It seems basic, these questions, but you'd be surprised how many people just take the recommendations of somebody and then of an advisor and blindly go with the advisor selected, and it's never a success that way. You can send the questions that you have to them by email, or you can sit in front of them and ask the questions, take these, add to them, and you can also sort of twist them a little bit and use them or variations of these questions with any company or advisement firm that you deal with, a mortgage broker, a real estate agent, an insurance agent, etc. Not only will it help you decide on an advisor, but it will indicate to them that you're aware of the rules and you want to be a real partner in the relationship, and not blindly follow all the recommendations. I think this sets the stage for a really good future partnership with your advisor. Now, there may be times when you have concerns or questions about your advisor or your account specifically. So I'm going to run through just what you do for the complaint scenario. So first off, it depends on if you're with an MFDA firm or an IROC firm, which you will already know based on your decision to select an advisor. It's also posted at your advisor's office, or you can look them up on their website to confirm. This decision between the MFDA and IROC goes away at the end of the year because the two organizations are merging into one as of unnamed organization, and it will monitor all dealers throughout Canada. So I'm going to start with IROC. This organization monitors all brokerage houses, all brokerage firms. And if you believe your advisor or firm may have broken the rules or bent a rule a little, they want to hear from you. To make a complaint, you first need to by starting to lodge that concern with the firm. All firms that are regulated by IROC have very, very clear rules that they have to follow. You have to acknowledge your concern in writing within 5 business days of your complaint, and then they have to provide a decision to you within 90 calendar days. And that in that decision, they will give you a summary of what they believe your complaint was, what they did to investigate it, and then explain their final decision. If there's any kind of delay in that 90 days, they will have to reach out to you and be very specific in terms of when they will get back to you. So you can do this in writing, by email, or there's a phone number that you can reach out to them. And as an aside at this point, please keep a file of all documents relating to your accounts with all financial institutions on an ongoing basis, regardless of whether or not you have an issue with them. You already had, because when an issue comes up, you'll have all the backup material that you need to lodge that concern or complaint. Some of the common complaints that IROC has heard is buying and selling in your account without your formal approval. It has to be in writing or formally made by you to the advisor. They recommend something that is not suitable to you based on the suitability interview that they have done with you when they opened up the account, and a delay in account transfers.
Pat, sorry to interrupt.
Yes.
We have a question. Do you want to take it as you go, or do you want to pause?
Absolutely. Absolutely.
We have a question from Abarna. Does the OBSI investigate the complaint with the client and bank separately or together?
Separately. Well, I mean, if they have questions, they will reach out to either party, but they do their own individual investigation with the information from both sides. They will take the information, but they won't have either party participate in the investigation, if that's clear.
Thank you.
And so just winding up with IROC, IROC also monitors all the trading on all the stock exchanges in Canada, but they don't have jurisdiction, so they don't regulate the stocks and ETFs for that matter that are traded. That is handled by the Securities Commission. So they monitor how the trading is happening, but not necessarily the stocks that are being traded on the exchanges. The MFDA, it's fairly simple. It's similar to IROC, except for their rules. When you sign up with an advisor with an MFDA firm, they have to provide you with a complaint information form when you're opening up the account. So then you can just put that in the file for future reference if you need it. These procedures also have to be posted on the every advisor's or dealer's websites. They have to be treated promptly, and that really means in their mind 3 months. And if there's a delay, again, they have to tell you what that delay is going to be. What I think is great is that at the conclusion of any complaint system, the complaint and their responses are logged into a database at the MFDA, so they can really monitor if there seems to be a trend with one dealer or an advisor very easily, and will make moves to make adjustments to that. And again, if you're not happy with the solution, you can reach out to the LBSI and they'll help you resolve the issue. Now, just switching briefly to insurance. This is not my area of expertise. However, I can provide an overview for you, and then in a future presentation, we'll have experts in to speak to you about all the details. First, you can pretty much insure anything, but the most common ones are on the screen right now. And some of these are either nice to have or required in certain circumstances. So we'll start at the top with life insurance. This is really a contract between you and the insurer. The insurance company will agree to pay a specific amount of money to the people or person that's chosen as beneficiaries in the event of somebody who passes away. You pay a certain amount of money each month, known as a premium, for this coverage. When an insured person passes away and the claim is made, a lump sum tax-free death benefit amount is paid out to the beneficiaries that are noted. It's a way of helping those that depend on, if it's the single wage earner in a family, it helps if something happens to that wage earner so that they can, the family can carry on. There's two types of life insurance, one called term and one whole life. The difference is really that term life is for a specific period of time, for example, 10 years. So if you happen to be 55 and you are continuing to work for, say, 10 more years, you want to protect your family for those 10 years. So you can get a term insurance policy that's a lot less expensive than whole life for the period where they may miss the income if you pass away, and then they have the retirement income that you've built up at 65 and above. Whole life, however, is for insurance for as long as that person is alive. And so you could get whole life insurance when you're 21, and you could be paying amounts for your entire life, but it covers you for as long as you live and as long as you pay the premiums. There's a lot of variations to consider, which one to have, and it's very personal. So no more details than that am I going to get into, but that's why you have an insurance agent to help you walk through that. Health insurance is the next, and it's not as vital as in, say, a country like the US, because we do have our universal health system, but there are quite a few services that aren't covered by the sometimes physiotherapy that you may want to get an additional health plan if you're not covered with your company's plan to cover those costs. There are options for services disability insurance, the next one down, is important for those of you that are self-employed. It can be a source of income during disability, whether that's physical disability or just any time when you're not able to work. So it can help you meet your financial commitments until your recovery. Auto insurance is required in Canada. You have to be able to drive on our roads and to be able to buy a car, to get the license for your car. But again, there are differences available, so you'd have to speak to an agent to understand what's best for your situation. Home insurance is a type of insurance that covers a private residence. It's a policy that can include losses that happen to your home, its contents, if you're not able to stay in your home, so it will cover the additional expenses of living somewhere else and losses to your personal possessions. This could be the result of fire or theft or a number of other areas. There's also liability insurance for accidents that may happen at your home. Somebody slips and falls on something you've spilt. There is that liability, so you may want to have that coverage as well. Most policies, or many policies, are very basic. So if you want to add anything to it, you have to have what is called a rider, which is a small amount extra for specific things. And this could range from anything from a specific piece of jewelry to extra flood insurance if you live near a river and there's the potential for flooding. If you don't own your home in which you live, there's also content insurance, and this will allow you to replace any belongings, again, if there's a fire or theft. And finally, travel insurance. Often this is made available if you pay for a trip on a credit card, but regardless, think about it before you travel in case something happens and you're not able to go. This allows you to get your money back from the travel agents or whomever you've booked your travel. Insurance is incredibly complicated, and while I've spoken up to now is about savings and investing, insurance is really the mitigation and removal of risk. So while you may not make money on insurance, it will save you from major losses. And as with any other areas in the financial services industry, they have a regulator as well. And it's called the Financial Services Regulatory Authority of Ontario, FSRA for short. And they regulate all insurance companies, credit unions, trust companies, mortgage brokers, health services providers, in relation to auto insurance and pension plan administrators. And within this, it's all the insurance companies, pension plans, credit unions, mortgage administrators, accident benefit service providers, insurance agencies, adjusters, and their agents. So they basically cover everything except securities and banking. This organization was created about 4 years ago to regulate and generally supervise all of the sectors that I've mentioned. Promote and provide public education, make explanation is as clear as possible. And if it also is there to deter fraudulent conduct, practices, and activities. Have a concern with anything regards to insurance or these other sectors, you can, FSRA also has a process to follow and you can contact them, although it's a bit different from the investment and banking sector. For them, you have to send a letter requesting from the complaint officer, which is a formal title at every insurance company, stating the company's final position, advising you of the name and detail of the ombudsman service that they deal with. Then you take that letter and you send it into the service, the ombudsman, with that letter. You can describe the complaint in your own words and why you disagree with their process and their findings. They will look into it, respond, and respond to you with the process and the timelines that it will take to get back to you. And I apologize for what seems to be spending a lot of time on the complaints handling systems in the industry, but I think if you know how to resolve issues and that there are processes to follow in every area, it gives you some sense of comfort going forward, especially if you keep really good records. And before I speak on what's coming up in the series, I know Comaran spoke at the beginning. I wanted to leave you with one thought. And that's Canadian regulators are really trying to ensure that you and your money are safe. However, their control only goes as far as those companies that are registered with them. Anyone can hang a sign outside their business that says they're a financial planner or an investment advisor, but unless they're with a registered company, there's no recourse through the regulatory area. You would have to take the person to court, which would be incredibly expensive. So if you take one thing away from this presentation, please confirm that everyone that you deal with in the financial sector is registered with the appropriate authorities. You can be confident there are specific rules to follow and that you have a complaint process to follow. And just a note there as well, somebody mentioned cryptocurrencies to me this morning, and I wanted to just make the statement that cryptocurrencies, although I hate that term, they are not regulated by the regulators. Some of the exchanges that they trade on are regulated by IROC because it's an exchange, so they can monitor the processes they follow, but the actual products are not. So if you invest in them, you really don't have any recourse if there is an issue. Hence, you see all the lawsuits that are coming out, but there's not a lot that the courts can do. Now, what's coming up? Comaran said there was 1 in 2 weeks. So take these dates and topics with a grain of salt, because we're still finalizing speakers and full series. We're also bringing in an expert to speak on fraud, how to avoid, how to identify it, how to avoid it, and what happens, what should you do if you are caught in a fraud situation. But these, I think, are the ones that we have heard from you initially, which is, what do you do when you buy your first house? So we will have experts on getting a mortgage. What is the real cost of owning a house, not just the mortgage? Quite often, people that are offering you mortgages tell you how much you have available and can afford, and they don't take into consideration all of the other costs that are involved in owning a home. Demystifying insurance. I will be sitting in on that one because it is an incredibly complicated topic, but one that's really important for you to understand to ensure that you don't incur a huge loss. Saving for your future will bring in experts that understand the products that you can buy to save for education, your home, retirement, and any other major or minor thing that you want to save up for. And then managing your wealth will have experts speak to how you want to invest that money and what should you do to ensure that you make the most of the amount that you've saved. Alternative finance, very high level term, because a lot of the peripheral products are come under that. So products that you may not want to invest in because they usually are higher risk. In that section, we will also be speaking about cryptocurrencies. And again, I'm really not a fan of the term currency because it's not a currency, it's an investment. But that's what it's been called, so we will continue on. But we'll have experts in talking about when you should invest and what it looks like and how to know which one to pick, because there are a multitude out there. So I apologize for throwing so much information at you. As I said, if you do have any questions or comments, you can ask them now. You can send them to my email. You can reach out to 369 Global and point that question, but we will be coming back to you on a regular basis with updates as soon as we finalize all of the speakers and the sessions. Each one we will come out, and hopefully you'll be able to come out to the rest of the series, because I think it'll be incredibly informative and helpful to you and your family and friends going forward. So with that, I'm going to stop and see if there are any questions that people have.
Thank you, Pat. As you look at the question, there is one that came in. I just wanted to share my screen and tell you that I think Pat may have inadvertently missed this from her table, but our very next one is actually on building your credit in Canada. which is happening on July the 26th, so essentially 2 weeks from now. And that one is really about how do you go about establishing a positive credit history in Canada, which is the first step in being able to achieve a lot more financial freedom and success in Canada as a newcomer. So that'll be our next session, Building Your Credit in Canada. You can expect to hear more information on speakers and topics related to that in the coming days. I will post the webinar registration link. Please do register for this webinar as well. This webinar is open to really everyone. As I was saying in the chat, it's open to all Canadians, but we're very much focused on new Canadians. So feel free to invite your family members, your friends, your colleagues, people in the community that you work with. Really, the more people who can gain knowledge and insights and tools from our financial literacy series, the better it is, because that's the whole point of us, doing this. So thank you again, and over to you again, Pat, to answer that one question that's come in.
Sure. The question is, are there investor protection? Is there investor protection provided if a member organization faces insolvency? Oops, I had feedback for some reason. Yes, there are. Both IROC and the MFDA and the Banking Association have funds that they have put in place, and each firm has to pay into it each year. But if a firm does go bankrupt, the clients will get their money. That being said, though, if you invest with the firm, the money isn't with the firm. It is held in trust with the product manufacturer. So if you invest in a mutual fund, the mutual fund company holds your money in a trust account. So even if the dealer goes bankrupt, your money is safe. So it would only be for a period of time that the firm held your money before investing that your funds would be at risk. So that's shrink one day. So the dealer's only going to be able to hold your money in for one day before it invests it. So there's minimal risk, but as I said, each organization has a solvency fund that the firms have to pay into. So I don't see any other questions coming in. And again, feel free to send them to me if you have one after the fact. I would be more than happy to respond. And I look forward to the rest of the series. Thank you, everybody.
Thank you again, Pat. Thank you, everyone who joined us today. We do have time until 1 o'clock, but it's always good to get a little bit of time back in our day. Thank you, everyone. Like I said, our next webinar is coming up in 2 weeks. Feel free to spread the word, share it on your social media. We do have a recording of this particular webinar that we will publish to all attendees. Feel free to follow SETFA 369 Global, 369 Connect, and strategically on social media, especially LinkedIn, where we'll be posting the video. So thank you again, Pat, and good luck to all of you.
Thank you.